Thank you for joining me. I'm Alex, and I want to talk about Apple because it's kind of sort of on sale and kind of not. So, figure we'd have a look and figure out if it's a good buy or not. So, what they do is they make monitor stands and also phones, I hear. Not sure. So current price is $275, which gives them a market cap of $1.2 trillion, which is, I mean, they're not a tiny company anymore, I guess. Not really that much room to grow there, but you know, they're not the biggest company in the world anymore. Saudi oil something is, but you know, 1.2 trillion is not terrible, I guess. Dividend yield just over 1% with a 24% payout ratio, which is not great, really. So for a dividend stock, obviously not the best. Revenue $260 billion, which is down, surprisingly. Earnings $55 billion, which is also down, surprisingly. And their PE is 23 and forward PE of 22, which actually is not that bad. I would have expected that to be much worse, but 22 is definitely in the realm of companies that I would invest in. Total assets $339 billion, total liabilities $248 billion, which gives them total stockholders' equity of $90 billion. That is also down significantly from the previous year, so things not quite going into the right direction, but it's mostly because of stock buybacks and stuff. So obviously with a profit of $55 billion, that's not really a concern. They could just, not do anything and increase the stockholders' equity by $55 billion a year. So overall, I have to say that as far as risk factors go, there's really nothing new. And I think they're more or less expanding their lead in services, and their other products are getting better than they were. MacBooks, MacBook Pro, Mac, iMac Pro. A lot of those are getting far better every year. Well, not every year, but consistently getting better. And they're also getting a higher price point, especially on the higher end, which all of that is not a terrible thing. They're having a lot of stuff that is for high-end users, power users, and high-end commercial applications. So overall, the non-iPhone business definitely going in the right direction. I'm not agreeing with all of their decisions. I don't know why they need to make a 5K display instead of like a 4K and an 8K display, but Apple just knows best what people want, I guess. So overall, there are really no new risk factors, but I do believe that the iPhone itself is kind of losing their edge, because I honestly don't think that the iPhone is the best phone on the market, and I honestly don't think that iOS is the best OS on the market. Android is getting continuously improved, and the handling of the phones is just better in my opinion, and changing settings and everything is less complicated, which is a huge blow to Apple, where things just work and things are simple and intuitive, and that's not really the case any longer. Obviously, Android also has an 80% market share versus iOS 20%-ish. So there's more users testing more things, having more feedback on things that could be improved. And so I think that the pace of innovation, especially when there's 20 companies working on the Android OS instead of the one that's working on iOS, is a huge advantage. So if the iPhone ever stops being like a status symbol, that could be a huge problem, but that change is going to happen gradually and you're going to see it coming. So I don't think that's a huge problem right now. And I think that you can sell your Apple shares when that starts happening instead of right now. But overall, I don't think this is a good stock for a dividend investor because the dividend is just too small. The dividend increases not enough. And I think that you should probably be getting better than inflation at the very least for a dividend investor. And so for a dividend investor, I really don't think this is the stock for you. Growth investors are also obviously out because there's negative growth, which is terrible. And value investors, generally you don't like companies that have an P of over 20. And so I really don't think that it's a great stock for a value investor either. And in addition to that, the growth is not there. The dividend is marginal. And the balance sheet isn't great either. So the stock buybacks certainly help. And the stock buybacks are going to push the stock price up. But overall, I think that there's way better choices out there for companies to buy. As even though the stock price of Apple is $50 less than what it was a few months ago, and so I'm guessing it's on sale, but it's not enough of a sale for me to consider buying it. So I think that there's far better opportunities out there, and I'm going to look into different companies. I don't think that I'll be investing in Apple right now, and especially at this price. I would have to see maybe the 200 price level again for me to consider buying Apple. Right now, way too rich for my blood. That's it from me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.